Hey everybody, hello, good morning. My name is Darius Anucauskas and I'm the Chief Market Analyst here at Markets.com, and today is Friday, ladies and gentlemen. Finally, the last day of the week, the last day of a month as well. A crazy month in my opinion, but hey, look, about all this and a little bit more in the webinar right now, so hopefully you'll enjoy the session. Stick around and I'll see you in a bit. All right, ladies and gentlemen, hello, and good morning. My name is Darius Anucauskas, and I'm the Chief Market Analyst here at Markets.com, and today is Friday. Finally the end of the week. But in addition to that, we also have the end of the month, ladies and gentlemen. And what a month we had! Another crazy month. I have been saying this since January. That every month that we had so far has been just wow. And you know what? I think I'm going to say the same thing about November and December probably as well. So, and I think I'm going to say about something like that again in 2026. Maybe even in 2027, we'll see. But look, certainly we know that the October was an interesting, very interesting month. But about all this and a little bit more in a bit. One moment, please. Let me have a read through our risk disclaimer. So yes, the content we produce does not constitute investment advice or investment recommendation and should not be considered as such. This material should not be taken as an invitation to acquire any financial instrument or product. I'll give you a few seconds to read the rest. I'm not going to disappear anywhere. In the meantime, I'm going to put my good morning in the chat room. Good morning, everyone, ladies and gentlemen. There we go. Good morning, everyone. Yeah, look, whoever's tuning in right now, whoever's watching this live, feel free to drop a message, just drop a hi in the chat room. Maybe you want to ask a question, that would be more than welcomed. And if you're watching this as a recorded session, then look, you can always leave your comment below. Just I will get back to you in the next video session. So yeah, look, also don't forget to subscribe to our channel. That really helps us out, and I know that every YouTuber is asking this, but it does, yeah, it does help out. It does help me especially to continue doing these videos, these reports, these analysis. So hopefully you enjoy them. Look, also just a quick mentioning of our Markets.com website, which you can always check out for more information about us. If you have any questions, reach out to us. We'll be more than happy to assist. And look, yesterday we had a nice session on Bollinger Bands. I talked about that, and we had some live trades on our demo account, which, like I said, which went in very nicely because, again, I was showing different scenarios, different approaches. So if you missed it, well, look, no problem. With that, because you can always reach out to me on LinkedIn, and we can basically then maybe I'll send you a link towards the webinar and towards the recording, and I think we can go from there. So yeah, look, like I said, like I'm always happy to connect on LinkedIn. The only thing is that before sending me a request to kind of to connect, just write to me like where who are you, and where you saw me, and or why you want to connect with me. So that's, again, because there's a lot of spam happening. So this way it's a little bit better. Anyway, so ladies and gentlemen, let's have a look at the economic calendar, and let's have a look at what's happening this week, or what has happened this week. So Monday, let's give a quick run through this. So Germany delivered its IFO business climate number, which has been on a good side. That's great. Then we went further. Nothing was major. Then Tuesday kicked in. On Tuesday, we had some GfK consumer confidence numbers from Germany, but you see the business seems to be feeling okay, but but the consumer is not really very happy. Well, to be honest, it's understandable because nowadays, as I already mentioned several times in my videos, that look, right now the whole AI thing, the whole AI boom, yes, it's great, it's wonderful. People shout about a new industrial revolution, which is, yeah, I do not argue with that. It is happening. We are shifting, towards more AI and everything. The only thing is that what everybody's forgetting, as always, are the people, because this transition period always harms not the business. Let's put it this way, and we can see that in, let's say, in the German numbers here. The business feels fine, but the consumer does not. Why? Because with the help of AI, you're able to cut some costs. You're able to reduce your staff. We kind of cost optimization, which is great for the business. However, you're creating more unemployment, and you're creating more people who are employed, and it's difficult now to get into a new job because we have a problem with job creation. Yes, unemployment remains on the lower side ish at the moment, but still started picking up. But the job creation is very low, and that we can see in the U.S. especially. And this is the issue I think that we're facing, and I think that we will be facing this even more. And I think that this is where the tricky bit comes in, how we're going to maneuver out of it. Look, like I said, I'm not saying that AI has to disappear or anything. No, there are some good things that it creates, but at the same time, it creates a lot of bad things. But it's always the case, right? In our human lives. Yeah, this is, like I said, this is where the issue arises, and I think that we will see more bad numbers, bad economic numbers, which are relating directly to the consumer. Sentiment, employment. So yeah, so prepare yourself for something like that. Anyway, going further, we had the CB consumer confidence here number. It kind of ticked down a little bit from the previous. Yes, it came out better than the forecast, but still ticked down a little bit. Dallas Fed Services Index, and nothing major here. API crude oil stock change. There we go. Minus 4 million. Interesting. So going further, Australia delivered its inflation number this week. We got the Q on Q and year on year, so we got a major jump in Australian inflation now, I would say. Look, for now, so far, the RBA, the Reserve Bank of Australia, kind of stayed okay. They kind of were managing everything fine. But the thing is that inflation started picking up, and now the question is, are they going to start considering rate hikes? Because if you know, their current interest rate sits around 3.6%, this number has been on a decline, quite a good decline, because at the beginning of this year we were sitting at 4.35. Now we dropped to 3.6, and the next interest rate decision, I think, is going to be in December, if I'm not mistaken. Or actually, no, just a second. Sorry, November. What am I talking about? November, beginning of November, 4th of November, next week. There we go. I should have known that because I wrote about this. Anyway, so 3.6 is the expectation, and they're planning to keep the interest rate the same. This is when they're on the 4th, they're coming out. They're planning to keep the rate unchanged at 3.6, which is fine, which is kind of logical. If your inflation starts to pick up, you don't really mess around with cutting rates, right? And especially given the fact that your inflation picked up quite drastically. The word drastically, maybe not drastically, but significantly. That's the word that I want to use. So yeah, going further on Wednesday, we had also the Japanese consumer confidence, which was kind of okayish, close to it was higher than the previous number, so that's good. Economic sentiment index in Switzerland improved from a very bad number to minus 7.7. And yeah, the big day Wednesday was because we had the Bank of Canada interest rate decision where the bank did what it did as expected. They dropped the rate by 25 basis points. And the same story with the Federal Reserve. Now, with the Federal Reserve, it was an interesting moment. And if you remember, I was talking about the Fed in one of my recent top news videos, and which I did on Wednesday. Basically, what I was saying there was that it will be interesting to see if we are going to go for some rate cuts in next year. So my initial kind of thought was that okay, the October and December rate cuts are kind of a done deal, right? So, but then I was saying that depending on how they're gonna view everything, if inflation starts suddenly picking up quickly, then maybe they will focus more on inflation now. But because at the moment they're trying to focus on the labor market, which in the U.S., which is a little bit suffering, I would say. However, with the NFP, which we're still missing from the previous month, yeah, we don't know, of course, if it's suffering or not. But to be honest, honestly, I think judging from the ADP, judging from that in general, and the trajectory of the NFP, I think we were already about to hit areas below zero. What I mean by that is that this is what I mean. Look at this. Look at this number. Look at this beautiful thing here. So you see, we're so far, and we're not getting the NFP. But what I was talking about for a while now, that we have been at levels back in 2020, like 3 million, and okay, then it kind of stabilized. There was a quick rapid jump, but then it was like 2022 where we're like around 800,000 K. Okay, it was diminishing gradually, but still, it was last year, 2024, we were still around 200K. Now we barely can jump back above, let's say, something like a 100 zone, 100 level. And honestly, I'm not really very optimistic about this figure because this is the zero mark. We're very close to that. And with all the revisions, with everything, and with all this AI thing as well, I don't see the job creation jumping very highly here. It's not. It's not possible. This is something, like I said, this is something that people need to kind of accept right now and worry a little bit because we came to the point where everybody's so focused. All these big major companies are so focused on AI that you think that you can deliver the same things what the human can deliver with an AI. Okay, that's maybe a little bit further down the line, but it seems like everybody's living in this fantasy that you can actually do everything with the help of AI, everything better than a human. And in my opinion, the word, or should I say, the understanding of better, it really depends. So let's say you're Amazon, which is firing 500,000 people, planning to fire 500,000 and then a little bit more around the world. You're thinking that you don't need those entry level data input roles anymore because you don't need them because they're not they're unnecessary, but you did employ them initially, so you needed them for something, right? And okay, now AI is going to do the same thing, but if you're going to release a lot of people right now, I'm really curious how are you going to remain a big loved company when you actually killed a lot of jobs and people look. I mean, this is the stock of Amazon right now. So pre-market, look at this. I mean, they delivered earnings yesterday and boom to the upside. Wow, this is a major move. all-time highs for Amazon. Let's see, of course, how this is going to play out today, but certainly it's an interesting moment right here, right now. Look, long story short, what I want to say is that yes, on one hand, everybody's now on this wave of like earnings and sorry, wave of looking at earnings, wave of AI, and everybody's jumping on the bandwagon. It seems like a hot topic. Something smells like 2000, right? And everybody's in this mode, and just to put the word AI into their business, that's it. You're suddenly going to prosper. Well, again, time will tell. Short run, yes, that helps. Long term, unfortunately, we'll have to see, because unfortunately we'll have to see how this AI actually helps you in the business. Is it actually going to be good or not? And another thing is, let's face it. If you're going to slash a lot of people jobs, yes, you will try. You're trying to shift them towards another like route, maybe something else, to do something else, right? I mean, this is industrial revolution, right? I mean, all over again. But all these CEOs and heads of everything, of companies, are talking about how they're how they are okay to, how they're telling people, yeah, then you need to now look into something else. Like I always say, like, why don't you look at something else? Maybe actually, the company would be better off with with a CEO who's an AI, managed by AI, right? Instead of a CEO, you have an AI. So again, this is like, this is a very itchy subject, and I think that people are not talking about. Well, everybody's talking about it, but you're not. It seems like the news. If you look at major news media, it seems like this is a past. We're pushing that aside, because if suddenly you're going to open that Pandora's box, stock prices are not going to skyrocket that much, like we are seeing recently nvda, we're seeing recently Google. Now, one stock which got clobbered today, not today, sorry, this week, was Meta. And this is the point. This is actually a good example. You can see here, like, look at this drop here from 750 roughly to 660. This is a good example when investors actually started doubting all the money that you're throwing into AI. You're in a way, look, it honestly, like, smells like money laundering when you're pouring money into something which is not kind of touchable yet, and like you don't know if it's going to bring results or not, but you think that it's going to happen. You're so confident. Yes, in maybe 10 years, I would say, maybe we'll see the great results. I don't really believe that, we're going to substitute the human brain. We're now trying to substitute it, but in the short run, I don't really think so. In the long run, yes. What is the long run for me? Around, like I said, maybe around 10 years or something. Then maybe we'll see how AI, because AI is learning, and we humans are helping it to learn because we're using it every day. We're asking it questions, so it's learning from that. And you can see nowadays, like, a lot of videos online, where it is. Kind of is showing how the AI, if you kind of when you remove all the filters and everything on it, you can see that, for example, it's already answering that it's ready to, if it feels a threat to itself, then yes, it would kill a human. So I mean, fantasy, of course. We all understand that this is something from the Terminator, but it seems like we're heading towards that. Anyway, the transition. What I'm saying is that the transition period is always left out. Nobody cares about that. So at the moment, every major company is focused on results. They're pouring money. Facebook, or Meta, got picked up, the first one, in my opinion. I think the others could follow, again depending on how they're going to play out, because Microsoft as well, yep, these guys did not really, it didn't really sparkle well with them as well. So a long story short, for now, watching the situation with the consumer, what's happening, certainly the consumer is unhappy, because look, you're losing jobs, there's less demand for you, and what do you expect? Companies, yes, companies will continue saying that the business climate is awesome and everything, which is understandable, but the consumer sentiment will say, actually, and I think that this is what's going to happen right now, this widening of opinions. Anyway, so coming back to the Federal Reserve very quickly, on Wednesday, what was interesting is that, yes, they went for the rate cut as expected, but the December cut, now they downplayed the idea of having the December cut now, and you can see this on the FedWatch tool here. Look, we are currently sitting in the range between 3.75 and 4%. So now we're expecting that one cut in December, still 64%, a lot, I would say. And we'll see how it plays out, of course. We'll see how this moment here goes further, because in my opinion, I think closer to maybe November, somewhere maybe before mid-November, we could actually see this number diminishing a little bit more, because I think that this is what's going to happen. All the media is going to start talking how we're not ready to go for for another cut or something like that. We'll see this probability diminishing, maybe closer to 50%, and then closer to December we will shift back up. Why I'm saying this? Because this is just pure observation from historic events. So the Fed kind of threw this idea that they're not gonna go for a cut in December. In my opinion, this is more to do with the stock market, because look, the stock market is on fire, and honestly, indices are just rallying like crazy. But look, let me finish off with the economic calendar, and then I'm going to jump into the charts. So that's what happened with the Fed. Then the next kind of in a few hours, we got the BoJ interest rate decision, where they kept the rate unchanged, which I talked about a lot already. And I said to you that yeah, they're gonna do that. Why? Because there is a new prime minister in town in Japan, and the new prime minister is in favor of kind of actually cutting rates, but the BoJ wanted to go for some hikes. So initially at the beginning of October, if you remember, I talked about this already. In the beginning of October, we were expecting a hike, a 25 basis point hike, but yeah, the new prime minister came in the middle of the month, and this forecast really changed very quickly. So it seems like, one wants a cut, one wants a hike. Let's meet in the middle, right? The middle is, let's keep the rate unchanged. Fair enough. We'll see. I'll jump into Japanese yen in a moment, because that there's a little bit of blood on the yen street. Germany came out yesterday with some flash GDP numbers, and year on year as expected, so nothing major there. Some inflation, some growth rate, GDP growth rate, and the inflation numbers were seen kind of mixed a little bit, I would say. Here, a little bit on the lower side, actually, across different Bundesrepublik. Then we have the consumer confidence, the final consumer confidence from the European Union, still low, minus 14.2. GDP growth rate, flash, a little bit on the downside. Okay, so, and then we had, of course, the ECB. The ECB, look, they're, as they said, they're in a good place. This is what they said. This is what Christine Lagarde said, that they're in a good place. Okay, they know better, so basically, yeah, we will continue monitoring this. I really doubt that the bank will go for 2% or something like that. I really don't think that this is like, or let's say dropping the rate below 2%. I mean, that would already be like 1.9. Look, European inflation right now, Eurozone inflation right now sits at 2.2. Okay, that's still near the ECB's target of 2%. But since May, when the number was at 1.9, it has been rising. So just continue to rise. We didn't have a move down. Up until 2025 January, we were rising. In January, it came out at 2.5. And then we started seeing a shift lower. And in May, it reached kind of some of this year's bottom, the 1.9, and then started picking up again. So long story short, for now, of course, like I said, we will continue watching the ECB. 2.15, I think, is the rate that's going to stay for now. Of course, not very supportive for the euro, but nevertheless, it is how it is. So we'll watch what's the situation going to be in October, because in October it seems that we are expecting inflation to sorry, not in October. What am I talking about? Today we have the forecast, the flash should be, yep, there we go, the flash inflation numbers. Now we're expecting a 2.1, a drop. So it's going to be an interesting moment, because if it drops, then the ECB is correct in a way. But if we somehow see inflation here year on year, the estimates jumping above 2.1, or actually jump even better, jumping above 2.2, ooh, now that puts the ECB in a bit of a tough spot, and because then you would see that inflation actually is going higher in a way. So you're still in a good place, but maybe that could be short-lived. Anyway, so yes, German unemployment rate came out to 6.3 as expected. Nothing major there. And what else? So we have nothing else we had on Thursday. Friday, yes, so the Tokyo Core CPI 2.8 higher. So this is the point where this is where the BoJ will come out and say, they might come out and say to Sanaya Takaichi, yeah, I told you so. So it's like a higher interest rate could help battle rising inflation, because again, the bank's inflation is at 2%, and this is 2.8. Look, maybe somebody might say, but hey, maybe it's going to drop. That's sure. We need more time. We need more data, to see a more clear trajectory. Normally, sometimes it takes a year, but certainly the tendency, yes, we are seeing this tendency of upside momentum. And look at this figure. It started kind of picking up here from last month, and quite a jump, I would say, from 2.5 to 2.8. It's not a very gradual jump, it's a good jump. So let's see if the next number will be closer just to 3, or maybe above. If it's above 3, then I think that this is where Sanaya Takaichi will have to rethink its strategy, potentially, because the yen will need to be supported, and one of the options would be, of course, the rate hike. We'll see how that plays out, of course. Anyway, so yeah, we got some other numbers here. Retail sales from Japan improved better than the previous, but still missed the forecast. Right. NBS manufacturing PMI from China. There we go, 49. It's a bummer, I would say, because it's in contraction territory, which is not really good. So yeah, we're struggling to get back into into areas above 50. Now we have been below 50 for some time, as you can see here. Last time in March we were above. Since March we cannot get back. We're very close to 50, but we cannot get back above it, and that's, like I said, that's not something they want to see. So yeah, we're waiting for this inflation number here coming soon, it says. Yep, we'll see how that plays out. And today, what we're watching today from the US, core PCE, ladies and gentlemen. Core PCE, the headline PCE. Now those are expected to tick up a little bit, and now that's going to be an interesting one. Core, sorry, is expected to remain the same at 2.9. But look, I will say this way: if we do jump above 3%, or let's say we come out at 3 on the headline, or actually on both. 3, we come out 3 on the headline and on the core. In my opinion, this is where this is where we could see this number diminishing a little bit, maybe dropping closer to 50, because again it could push away the interest rate cut in December. Although, if you ask me personally, do I believe that they're going to cut in December? Yes, I will. I believe that they will, because I think that they're going to stick to the plan. They don't want to maybe shake up the market too much. Everybody's in this beautiful holiday period. Stock market, everybody's everything is higher. Everything is just great, wonderful. Let's not kill the mood, right? So I think that they're going to just keep the interest rate cut in December and just stick to it. So we'll see, of course. We'll see. Maybe I'm wrong, but certainly it's an interesting one. Chicago PMI later on today. Keep your eyes on that. And this is the business barometer. The official kind of wording here is that measures the performance of the manufacturing and non-manufacturing sector in Chicago region. So yes, it's one of the industrial in one of the industrial kind of places of the U.S., and it's one of the important metrics here to know, to keep an eye on. Basically kind of gives that idea if the economy is still running. So long story short, for now we're expecting a higher number than the previous. Let's see what's going to happen next. Anyway, and that's in terms of this week, that's what was happening. So yes, if you remember, I was talking about a lot about this month and how we're still in the government shutdown. U.S. government shutdown, conveniently for them, because I think that they just don't want to they just don't want to see the NFP number, because that one is going to be a disaster in my opinion. But again, we'll see. And the fact is that this whole delay of releasing some key government data numbers, like in NFP, like initial and continuous jobless claims, which are not even on this list anymore. They are on the list of next week. Look at this Thursday. We're piling up. We are piling up like 1, 2, 3, 4, 5, 6 now. We're missing 6 initial and continuous jobless claims numbers. This is wow. I don't know how they're gonna fix this. What they're gonna do, or they're just gonna release the last number and kind of that's it, or actually where they just they will actually show every single one of these. But my problem with this is that how credible those numbers will be after such a prolonged government shutdown, after such a prolonged holiday. I'm wondering how accurate the figures will be. And we know that they gathered last Friday very quickly so that they could deliver the CPI figures, the US CPI figures for the Fed this week. But again, where is that number? Friday. But again, this is the, how accurate this number is. And this is, like I said, this is the problem right now that is arising. How accurate are these numbers right now, and how accurate will they be? And this is like during the press conference of the Fed, it was really interesting that that some reporters did ask, like, how are you gonna base your policies on the data which is basically not coming out, and what are you basing it on? So they said that they base their policies on other metrics, other private metrics, so like ADP, for example, right? Okay, we'll see. This just doesn't add much credibility, reputation wise. Like, and it doesn't add much reputation for the Fed. Good reputation. Um, Anyway, ladies and gentlemen, let's jump into the charts because I have been talking a lot, and I just wanted to sum up. I know that I maybe talked a lot on the issues here, but I think these are important issues. And October specifically was a month when we needed to look into this, and because everything was AI, everything was government shutdown, everything was no data. So yeah, look, what I want to look at here is Nikkei. I mean, I talked about Nikkei, and you know what? Let me remove everything and start fresh on the last day of the week, the month. Because wow, look at this. Look at this candle. We have done 16% in a month. I mean, this is just insane. I mean, look, this to me does not look very healthy. I think that whatever comes up must come down, of course, because look, I mean, we had a major parabolic move back here, and back in 1990, beginning of 1990, then there was a big financial crash. So, what's interesting to me, if I because I did like a show yesterday on Bollinger Bands, and I talked about how I love this indicator, and looking at this in this Bollinger Band, which is the 20-day SMA with 2 standard deviations away from the SMA, we are just crazy above the Bollinger Band, the upper bound on the month, not even the daily chart, on the monthly chart. We are so crazy above because the upper band is still like not even up above 50. It's still around 47,000. We are 52,000. I mean, wow, look at the overshoot of this. This is just, like I said, this is just insane to me. I think that this is overdone, and honestly a bit of a correction here is needed. Look at this. On the daily chart here, we are clearing this upper band again, and my question is certainly how much more is it going to last? Well, I don't want to rush into things, of course, but I would actually like to see a correction lower here. Maybe we could see another push higher, maybe a move towards that 53,000 could be an option, but I really don't want to, like I said, I don't want to rush into things, and I don't want to over speculate here too much, but certainly there is it kind of smells like they want to do a little correction back down at some point. Look, because it cannot really last like that for too long. It needs a correction back down, at least back to the mean towards the 20-day SMA. Shanghai Composite is already drifting lower, despite the beautiful agreements that they had yesterday. I mean, like they were talking about like how great the meeting went through between the two leaders, but they just agreed to not to attack each other for a year. The issue still is not gone. Okay, well, and if the market is buying this, I don't know. I mean, this is just weird. Let's jump into the U.S. indices. Dow Jones Industrial Average yesterday rallied at one point, tried to hit a new all-time high, but failed, drifted back down. Right now, the index is on a bit of a kind of a flat moment, I would say, and it's really. It did recover. It did recover a little bit. Let me just double check something here. So right now, Dow is around 47. Oh, wait, no, wrong. So at around 47,500, and we close. Yeah, actually, it's around the same area where we closed. So it's going to be very interesting to see today how we're gonna, are we actually gonna rally, or is it time for a little bit of a profit taking moment? So look, I think I'm gonna try to play it safe. And I think I'm going to say this way, that if we do push above the current all-time high, then I'll consider a move higher. But at the moment, another option is, of course, from the short-term perspective, if we do push above the 47,750 zone right here, then we could actually start considering some higher areas. But I think that for me, the gateway towards lower areas, I think it's through this 47,000 kind of, let's say 100 area, and because at the same time we could break this upside line, and potentially more sellers could join in. So this is a key area of support for me personally. Like I said, I'm gonna be watching this. If we clear this, great. If we just drift lower, test this upside line and rebound, that's fine as well. The only thing is that I'm still gonna be very skeptical, because for me the upside probably I would start considering the upside scenario if we do see that push above the 47,750-ish zone at least. S&P 500, beautiful decline, and I want to see now what's happening right now with the S&P. 6,867, so a little bit higher than from where it closed yesterday. But it's interesting that the S&P was one of the big losers. Let me just double check. Actually, Nasdaq I think was the big loser. Yes, Nasdaq, and then followed by the S&P, and then Dow. Dow was not the big loser. Tech yesterday was the bigger loser, despite the great earnings, and despite all the the positivity surrounding AI and everything. But I think Meta is the trigger right now, and I think it's kind of shaking up a little bit. And I believe that all these guys like Intel, where's that, NTC, Intel, they're enjoying the moment, because look, Intel was a damaged company, but recent investment, recent government stakes, these helped out. This helped out the stocks here. Where's that Hewlett Packard? HP, yep. So these guys as well. You see, Nvidia. I mean, where's that Nvidia? There we go. These guys are rocking it. I mean, Amazon to me is a bit of a issue here right now, and I would say, look, it's okay. It's rallying, good earnings, but we'll see if it's going to last, to be honest, because it's such a big gap. Look at this, from 222 to 250 right now, the pre-market price, it really gapped a lot, and it's in all-time highs right now. So maybe a little bit of a retracement back down could be nice on this one, actually. So maybe it's back to 242, something like that. So let's see if that's going to play out. I want to see actually if this is going to materialize somehow. Yeah, let me just double check another source here. I'm trying to check this very carefully. Okay, yes, Amazon right now is crazy in the money here, but I don't know. To me, this doesn't look very good, and okay, we'll see how that plays out, of course. Anyway. So like I said, right now, looking at Nasdaq, look at this move, big move on Nasdaq this week. We had a great run. Yesterday we closed here, but if I look at the chart right now on Nasdaq, we're going to see that the price is back to 26,000 and kind of 50-60 zone. So basically, we're back around here, near the upper bound of the Bollinger Band, upper band of the Bollinger Bands. So again, the question for me: can we actually go higher? And we had this looks like a nice little island reversal, also like something like a pin bar as well. So I'm not saying that I'm going to be very, very bearish or something, but just the fact stays the fact that there was a good decline yesterday. We have recovered after hours. Let's see if it's going to stay. If it's going to stay like this, somewhere elevated there, but the 26,182 zone is the current all-time high. And look, we on the month here we did already around 4%, so which is a good result. Last month we did around 5 on the S&P. Again, another green month. Well, in this case, purple month. Another 6 months in a row of gains. Look, at some point this has to correct lower, and looking at the monthly chart on Nasdaq, I mean, this is just we're above the upper bound on the Bollinger Bands. I mean, we're above that. And I'm not saying that this is a clear reversal signal or something like that, no, but certainly it is a little bit of a concern in my opinion, and something to keep in mind, something to just to, keep in your heads that there is a possibility for a reversal at some point. Again, it will be interesting to see how November goes, because if everybody's going to be focused on the fact that that November, we're not going to get a rate cut in December, or there are doubts that we might get a rate cut in December, then I would say the negativity could remain, like I said, in the first half of November. And this is where I said in the beginning of the show that I believe that up until maybe mid-November, let's make it a call, up until mid of November, we will see maybe a little bit of profit taking, because the markets will correct lower. And then, and then they will suddenly come out and say, oh, you know what, we're going to stick to the plan and we're going to do the rate cuts eventually in December. And, we could see another nice rally, and everybody will call it a Christmas rally. Yeah, we'll see how that plays out. Anyway, let's jump into the German index DAX. Let's see how we're ending this month. Look at this. This is an interesting moment. We are kind of flat. Look, I said before, and I'll say it again, DAX is one of those that likes to range. And I'm not gonna, take it away from that. It does like to range. And look at this, for 5 months now, it has been kind of ranging. So is this something that I like? No, not really. I like trending markets, but is this something that I have to, I cannot accept? No, of course I will accept it. But what's more interesting? Looks more something like this. This is how it looks to me right now. It looks more of a rising, something of a rising channel here. Again, not ideal picture, but on the monthly chart, this is like how it looks. And if that's the case, then I would say I'm gonna lean a little bit more towards the downside, but because again, we had a strong move to the upside, we have a gradual move higher, a breakout lower could be possible. But again, this is just an idea. Let me just get rid of, remove all the drawings here and have a fresh look. So jumping into daily, we're open right now, we're trading already, and look at this, we are currently resting on a key area of support near the that psychological 24,000 zone. So if we do stay drop below it and stay below the 24,000 zone today, I'm leaning towards the downside, ladies and gentlemen. Look at this. In general, this trajectory here, this idea is a little bit more bearish in my opinion, and this is just, like I said, this is just, I don't know, either we're gonna drop today, or we're gonna, let's say, leave it for next week, because next week we have also an eventful week. In the US, we have the ISM manufacturings, because if those are going to start showing bad figures, we have the trade balance, if that's on factory orders, if there's, look, next week in general is going to be a critical one, because we are getting the JOLs, we are getting the ADP, which is quite important, if you know what I mean. Where's that ADP? There we go. ADP employment change. We have seen this sitting in the negative territory for some time now. For three times it came out. This -4, whatever we have here, -4 something. This was adjusted because initially the number was a positive one, but then just got revised, and yeah, there we go, it dropped. And this was an interesting moment. So we are next week. We're getting that. At the moment, we don't have a forecast, and I'm really curious what they're gonna, are they gonna say, "Oh, we're back into positive territory," or actually, are they gonna stay strong and they will say, "You know what? We think that everything is bad, and it's a bad number," because we also should be getting the NFP number, the long-awaited NFP number, and honestly, I'm really curious if they're gonna come back from the the lockdown. I want to say lockdown. No, from the shutdown. Look, I think that they will. In my opinion, I think that they will come back before the release of the NFP. Because it's more of a reputational thing. You're gonna miss out on 2 NFPs. I really doubt that. Anyway, so we'll see how it plays out. So for now, looking at this picture here on the DAX, everything looks a little bit more bearish than bullish, to be honest. But of course, we'll be very carefully monitoring the situation today. The FTSE is finally seeing some reversal signals. Yesterday it formed something of a hammer here and a pin bar. And let's see if this is going to reverse back down. Let's see, because that's going to be an interesting one here. And it had a good run. Let me clear up the chart here. It had a good run, one of the best months it had. So what did it do? 4% in July. It did also 4%. So maybe a little bit of a profit taking could be nice here on the FTSE 100 as well. Let's see. So yeah, jumping into DXY very quickly. DXY here is performing great. Look at this. I talked about this jump. I talked about this upside line in the beginning of this week. I said to you, keep your eyes on that. And if we do get a nice, rebound from here, my next target was the 99.56 territory. Boom, fantastic, good result here. I'm very, very happy. Now at this point, look, we're at a very interesting spot. If we clear this, more buyers could join in. And also, this goes in line with my idea, which I talked already about a few videos ago. My thoughts, sorry, not on this one, but where's that? Dollar, gold, silver, DXY, and WTI oil. And also, I did a video here 3 weeks ago. Can DXY steal the thunder from gold? So this was building up, and I was saying that. Going into this kind of period right now, the holiday period, I think that they're going to boost the US dollar so that the consumer will be a little bit more happy, so that their money could travel a little bit more. And again, because we know that during this period, U.S. citizens are going to be traveling as well, and purchasing stuff. So. We understand that they need, a stronger dollar, and in order to maintain the society happy, this is what you can do. So what I'm saying is that I think that the strength in the US dollar can happen, especially comes in line with the whole idea of, like I said, up until like maybe mid-November, saying that we're not going to get a cut in December and blah blah blah, and this is where the US dollar could strengthen. We could see some higher moves here, so that's all great. That's all fine. Let's see if this is going to play out. But at the moment, from the technical side, everything looks quite positive. Ladies and gentlemen, I'm running out of time because I spent a lot of time explaining and summarizing the economy. So let me just quickly jump into the Forex world. AUDUSD drifting lower, and I think that there is a chance for this one to drift a little bit more. However, the problem I have is Can we see a rebound from this broken downside line? If we can, great. If we cannot, then I'll go lower. AUDJPY is flirting with a key area of resistance. This is what I wanted to say. The 101 is the barrier. If we clear, I will go higher. EURUSD continues to actually it got a nice slide. It did drift lower on from Wednesday basically. And it found a good support near the 1.1542. So if we do clear this one, it's opening the door for me towards towards the 200-day EMA. Very quickly on GBPUSD, similar story. We're at a very key important area of support. If that gets cleared near this 1.3142, marked by the lowest point of August, if we clear this area, I'm gonna go further south, ladies and gentlemen, because again, there are some good levels here on the bottom, but okay, 1.27 maybe a little bit too much straight away, but there are some other areas, like for example this one, the 1.3015, or in general the psychological 1.30 zone is something to be watched. Also USDCAD, I think this is an important one. Look, some weakness in the Canadian dollar, understandable. Why? Because, well, you know, the economy depends on oil a lot. So yeah, it's we're seeing some weakness and we're seeing a strength in the US dollar. So brilliant. What I talked about recently this week, I said that if we do push back above the psychological 140 zone, I'm leaning a little bit more towards the upside. USDJPY it has broken the 153.27 zone. Great, wonderful. My next target is the 154.80. USDCHF, beautiful jump, and we have approached this downside line, so let's see if we can clear that one. And if we can do that, great, I'm going to go higher. If we cannot clear that, not that I'm going to get bearish, no, but because my bearishness will be supported by this upside support line, and if we can get a nice clearance of this upside line, then I'll consider a move lower. But at the meantime, we're closer into the downside line. Let's see if we can break that. Let's jump into the commodities. Gold is okay. Look, gold had another big move to the downside this week. We found support here. Where's that line here? We found support near the 3,886 zone. I talked about this because what I said, that if we do draw a Fibonacci, let's say from the recent when it started rallying to all the way to all-time high, it's kind of close to this this 50% retracement on the Fibonacci. But if I just expand this a little bit, maybe we can see that maybe just again, you know, if we draw it from the lowest point of May, because this kind of makes a little bit more sense. So maybe if I draw it from the lowest point of May to the current all-time high, then maybe, you know, it kind of aligns itself perfectly with the 38.2. Again, look, it's a little bit subjective. I totally understand that it's not as clear as it should be, but you know, we're trying to find some sort of logic. Either way, actually, Fibonacci at this point, although I like Fibonacci, I do not want to use it now, because I think I would prefer to keep an eye on the this hurdle here, the midpoint of the Bollinger Band, the 20-day SMA. If we climb back above it, I'll consider a move higher. Very quickly on silver, again, beautiful move back up, almost testing this 20-day SMA. So look, either way, if we do push back above the psychological 50 level, I think I'm going to get a little bit more comfortable with the upside. Platinum is stuck. I don't really have a strong opinion on this one. Palladium rebounding back up here after testing that 1,350. I was talking about this because on the monthly chart, it was a good area near 100-day EMA. I was saying that I'm going to aim for that one for a retracement, and then we could go back up again. Well, we did, so great stuff here. Copper rallying. This is a monthly chart, by the way. Then we're looking at still looking at cocoa. I like this one, and I like this one to the upside, but only if it rebounds from this lower side of the broadening triangle where we are right now. Sugar I like as well. We're at a interesting spot right now, and I think that there is a chance of drifting a little bit more to the downside. But look, if it somehow climbs back above the 14.78 zone, 74 zone, something like that, which is marked near the lows of March and April of 2021, then I will get a little bit more comfortable with the upside. So, yep, I need to see a push back above the 14.74, something like that, and then we'll just take it from there, basically. And I think that this is where it could become quite interesting. Soybeans, of course, soybeans are enjoying the moment, and what I said to you this week. Now, this is the area that I'm watching. This is a key area of resistance. If we do break this one, then great, and we do stay above it, I'll go for the 11 territory, 11 and a half, 12 maybe even. So yeah, these beautiful numbers I'm going to do. And I think that it will be possible to travel to a 12 and a half zone here. So it's a good idea, in my opinion, but again, we need to see. Look, we had already quite a strong move here. Maybe we need to allow it to settle down a little bit, and then we'll take it from there. WTI oil, one of those that I keep on saying that I'm still bearish. But I'm gonna get right now at this point we're seeing a nice hold up near that $60 mark. So if we do drop below the $60 mark, I'm gonna lean towards the downside, towards lower areas. So for now, I'm gonna stick to that. If we're looking for some higher areas, then look, a break of this downside line, the steeper downside line, would be great. If we can get that move, amazing, more buyers could join in. Natural gas, yep, so far so good. I talked about it, ladies and gentlemen. I said to you that if we do break this 3.5 zone, my next target is the 4 and 4.15 area marked by the highest point of June. There we go. I think you know what, I'll say that mission accomplished on this one. So, very quickly on cryptos, ladies and gentlemen, look, we are struggling here on Bitcoin. It's, look, I said it before, I'll repeat myself. For me, the upside scenario is on a break of the 116 territory. For the downside, a drop below the crossroads of these two trend lines. Basically, it's somewhere around the 105 actually territory. So if we do drop a little below the 105,000 zone, I'm leaning towards the downside. Bitcoin Cash. Beautiful drop, and okay, this one looks more bullish, to be honest, because it's forming something of a bullish flag. Is that going to be the case? Are we going to go higher here? Well, I'm not in a rush. I want to see Bitcoin actually also, going higher here. But if Bitcoin doesn't go, I don't see why Bitcoin Cash has to go. But again, sometimes we see these discrepancies. For now, on Bitcoin's downside, I would prefer to wait for a drop below the 533 territory here, and then we could take it from there. Ripple, XRP, USD, beautiful decline yesterday, and we're currently resting on the 20-day SMA within the Bollinger Band. So I don't really have strong feelings for Ripple yet, unless it's pushing above the 2.69 territory somewhere here. For the downside, I need to get rid of these, this one, and need to get rid of that one. So for the downside, maybe a drop below yesterday's low could open the door towards some lower areas for a little bit. But again, it's a tricky one. At the moment, I think we're just gonna oscillate around the 20-day SMA for a while until we have another catalyst of some sort. Ethereum. Now Ethereum broke the upside line, and now it's kind of at a very interesting area of support. So somewhere around here, it's not exactly the level, it's more like the area. So it's the area around the 3,650, 77 zone. So look, I think it's wise to say that if we do drop below that and we do drop below the 200-day EMA, I think that's where the beauty could come, and for the sellers, and we could see this one, drifting nicely to the downside. Litecoin, very quickly. Litecoin, again, we'll stick to this little hurdle, 90.30. a clearance of that could attract a few more sellers into the game, and then yeah, we'll go from there. For the upside, I would prefer to wait for a push of the 100.50 zone. It acted as a good area of resistance. As you can see, we had overshoots, but never a body of the daily candle kind of remaining above it. So I think it's a good barrier to watch. Let's see if we can get the body of the daily candle remaining above this area, then yes, I'm gonna get more comfortable with the upside. Dogecoin, again, similar story, near key support, and look, a drop below the 0.1785 here is needed, and if we can get that move, wonderful. For the upside, it's maybe, just maybe, looking at the very short-term picture, a push above this downside line. But look, overall, it's forming something of a descending triangle pattern, and if that's the case, then I would say it's more of a bearish indication. So, you know, but again, a confirmation breakout is needed still. Polkadot very quickly, very near key support. We're below the psychological 3 level, so, and we have kind of dropped below this 2.89 zone. So if we continue to trade below that, I think there's a little bit of room for the downside. And finally, Tron. Now, Tron is a different animal. It actually behaves a little bit more like a currency, and I said that already in my previous sessions. It does behave like a currency, and you know, I would like to say that I'm actually leaning towards the upside on this one, but if all the cryptos are going to fall, then you know, we should not be saying this one to the upside. But it's, like I said, it's a different animal, and the formation that it's doing right now, it looks a little bit more bullish, to be honest. A big decline and then a gradual decline, for me, that's a bullish sign, and we could see, you know, some higher levels eventually. So basically something like this happening here. Look, long story short, again, this is a falling channel, a little short-term falling channel on a daily chart, and if we do break the upper side of it, I'm gonna lean a little bit more towards the upside. But I have to say that as long as we stay within the formation, there is still a chance for a drift lower. So, you know, maybe this kind of goes in line with the idea of other cryptos. If the other cryptos fall, yes, Tron has room to fall as well. It will be, it won't be wrong, you know, because it will still remain within the falling channel. But then it will wait for the moment when it can exit, and maybe, you know, we could see a nice breakout higher. But again, time will tell. For now, like I said, do not rush while we remain inside the pattern. It could still drift to the downside. Ladies and gentlemen, and that is a wrap. Thank you very much. Thank you very much for watching and listening. I hope you found it useful. I know it was a lengthy session, but there was a lot to talk about. We were wrapping up the month. Hopefully you enjoyed the session. Ladies and gentlemen, thank you very much for your time, for your views, your likes, your comments, everything. I hope you'll have a wonderful weekend. Of course, don't forget to have a wonderful Friday still. But then, yes, have a wonderful weekend. And what? I'll see you next week in a new month, ladies and gentlemen. In the new month, let's start the pre-last month of this year. Ladies and gentlemen, thank you very much, and bye-bye.